It's my pleasure to introduce our first opening keynote. Teresa Bryce Bazemore has over 30 years of experience as a senior executive in the mortgage banking industry. She currently serves as the president/CEO of the Federal Home Loan Bank of San Francisco, and previously served as the president of Radian Guarantee and in various executive capacities at Radian Group. She serves on the board of directors of the T. Rowe Price Funds, First Industrial Realty Trust, and the FHLB Office of Finance. Her varied experience and expertise include corporate governance, succession planning, enterprise risk management, executive compensation, strategic planning, and audit committee matters. Presenting Advancing Racial Equity, Increasing Homeownership, and Wealth Building, please help me welcome Teresa Bryce Bazemore.
Good morning, everyone. And thank you for the invitation to be here. I'm delighted to be with you this morning. I want to especially thank Renee for inviting me to talk to the AACUC at its 25th annual conference, which is amazing. I had the pleasure of serving on a panel with her last year at the NCUA's Diversity and Inclusion Conference, so it was terrific to meet her there. This is a major milestone for an organization that has an important mission and is making a difference every day with its commitment to change. I'm personally inspired by how effectively the AACUC is working to shape diversity, equity, and inclusion, and yes, belonging, throughout the credit union movement. Because we know how much DEI matters inside our organizations and in the marketplace. The focus of this organization on being bold, mindful, and brave is something that I, as president of the Federal Home Loan Bank of San Francisco, especially applaud as we all are working to advance racial equity and promote financial inclusion with the goal of achieving economic prosperity for everyone. Let me begin by telling you about the Federal Home Loan Banks, which are 11 regional banks spread out across the country, and about Federal Home Loan Bank San Francisco, which I'm proud to lead. Federal Home Loan Banks generally operate somewhat behind the scenes, although we have been a little more visible this year given the turmoil we saw in the banking sector in the spring. The Federal Home Loan Banks are cooperatives, much like credit unions. Our members are credit unions, commercial banks, savings institutions, community development financial institutions, and insurance companies. Like credit unions, our members are our shareholders and our customers. For 91 years, we have ensured that financial institutions of all sizes and eligible charter types have reliable access to liquidity when they need it. Created in 1932 in the midst of the Great Depression, the Federal Home Loan Bank system plays a critical stabilizing role in our country's financial system, especially in times of stress, as we saw most recently in March of this year. We also saw that stabilizing effect at the onset of the pandemic and in the great financial crisis of 2008. Our primary role in the nation's financial system is to be a reliable provider of liquidity to our member financial institutions, liquidity our member lenders need to make home mortgages and provide credit for other purposes. Many of our members borrow from us every day using our financial products and services to lower their funding costs, reduce interest rate risk, manage liquidity, and offer a wider range of credit union products to their customers or members. Access to funding day in and day out during all market cycles from their regional Federal Home Loan Bank gives local lenders the confidence to originate mortgages and make other loans to their customers and members, offer small business and community development loans, offer financing support for farming and agribusiness, and more. In March of this year, the Federal Home Loan Bank system seamlessly expanded at a moment's notice to meet the increased demand for liquidity in the market, issuing a record $495 billion in term debt and closing the first quarter with system-wide advanced balances of over $1 trillion, an increase of 28% from year-end 2022. The system was designed to work just like this, to expand and contract. You can think of us as like an accordion, according to the liquidity needs of our members. The funding that Federal Home Loan Bank San Francisco supplies helps our members meet the credit needs of their customers and communities, strengthening the communities they serve, creating opportunity, and changing people's lives. Each of the Federal Home Loan Banks serves a particular region in the U.S. Our bank district consists of Arizona, California, and Nevada, where we have 327 total members. Whatever region we serve, we believe strongly in the importance of community lenders of all types and the unique value you bring to local communities and local economies. Today, very close to half of our members are credit unions, and among our 157 credit union members, 15 are designated as minority depository institutions. Depending on your role at your credit union, you may know the value of your institution's Federal Home Loan Bank membership. Our credit union members, like other members, rely on us as a source of low-cost liquidity. Access to funding from us, loans we call advances, allows our credit union members to meet the always challenging and changing needs of their members and communities. Over the last 10 years, our bank's credit union borrowers have taken out advances totaling $3 billion. In addition, we have provided $2.8 million in discounted advances that our credit union members have used to finance housing, mortgages, and a variety of economic development activities that benefit underserved communities. So while we are not a household name, our primary purpose as part of the financial system is an important one, but we also have an equally important public purpose. The Federal Home Loan Banks actually have two missions, or a dual mission. First is our liquidity mission, which plays a key role in sustaining the overall housing market by ensuring the continued availability of the 30-year fixed-rate mortgage and making mortgages more accessible and affordable for borrowers across the country. But equally important is our mission and commitment to expanding access to affordable housing and homeownership, and to supporting community economic development. Since 1990, each Federal Home Loan Bank has contributed 10% of our annual net profits to our Affordable Housing Program, or AHP. And system-wide, the AHP is one of the largest sources of privately funded grants in the country. This funding empowers our members to partner with local affordable housing developers to help meet critical needs for more affordable housing by delivering grants to create or preserve housing for very low, and moderate income families and individuals, including many especially vulnerable populations like seniors and the chronically unhoused. Over the life of the AHP in San Francisco, we have awarded $1.14 billion to build or rehab over 141,000 units of housing in Arizona, California, and Nevada, and other places where our members do business. We are proud of this because an affordable place to call home increases the financial security of a young family just starting out, a senior who wants to age in place, or an individual who needs both shelter and supportive services to start over. And for many lower income households, access to quality, affordable housing in a safe and healthy neighborhood is the foundation for a brighter future. Homeownership is key to building strong, stable communities. It enables families to put down roots and has many benefits for children. And it is the most impactful tool for wealth building. As part of our affordable housing program, We also set aside a portion of that 10% annual contribution to fund down payment assistance grants, which flow through our members to home buyers with incomes at 80% or below area median income. Since the first home buyer received a first-time homebuyer matching grant, our bank has dispersed more than $141 million in funding to help nearly 10,000 families and individuals overcome barriers, the biggest of which is coming up with down payment, to achieve their dream of owning a home. But that is not all that Federal Home Loan Banks do, in partnership with members and other stakeholders to invest in and strengthen communities. Voluntarily, as part of increasing our annual 10% contribution to up to 15%, Federal Home Loan Bank San Francisco also recently launched a new $10 million pilot program to offer down payment assistance grants for the missing middle, people who are our teachers, firefighters, and other essential hardworking members of our communities with incomes from 80% up to 140% of area median income. In an environment of rising interest rates and high home prices, our credit union members have enthusiastically embraced this opportunity to assist this segment of our own membership. So going beyond the mandated AHP funding, each of the Federal Home Loan Banks voluntarily develops products and programs targeted to local and regional needs. This year, our bank was the first in the system to develop and implement a state-targeted fund for our HP to address the critical affordable housing shortage in Nevada, where they have just begun to develop the nonprofit infrastructure to compete for grants like ours and from other funding sources. We were excited to announce last week that we have awarded Nevada Targeted Fund grants for 6 important affordable housing developments in the state. Another example is from the Federal Home Loan Bank of Atlanta. Because heirs property is a significant issue in its district, the Atlanta Bank created a $1 million program to make grants to help prevent and resolve heirs property issues and help strengthen the financial situation of impacted families and communities. Heirs property is a barrier to the accumulation of generational wealth, leads to neighborhood blight, and is a pervasive issue that disproportionately impacts African American communities. The Federal Home Loan Bank of Boston recently launched a special purpose credit program aimed at the Black homeownership gap in New England. Their Lift Up Homeownership pilot program offers down payment and closing cost assistance to people of color buying their first home. And also, many of the Federal Home Loan Banks have long had voluntary programs to support small businesses and boost economic development. This year, San Francisco's Board of Directors more than doubled funding for our AHEAD Economic Development Grant Program to $4 million in recognition that many underserved communities are still struggling with the aftershocks of the pandemic, and that many of the nonprofits that are in the business of meeting the needs of these communities need extra support. Our credit union members have access to our HP, and 11 credit unions in our district have partnered with local nonprofits and affordable housing developers to expand the supply of housing options where they do business. These members have directed nearly $15 million of AHP funding to support 38 projects, providing over 1,400 units of affordable housing for people in need. Credit unions have long been enthusiastic supporters of our WISH first-time home buyer program, which offers a 4-to-1 match of the home buyer's contribution towards down payment and closing costs. Together, we have delivered $22 million in matching grants that have helped make dreams come true for more than 1,300 low and moderate income families. And at last count, 22 of our credit union members are participating in our new $10 million voluntary middle income homeownership program. That was just launched in May, and this popular new program has already provided grants of up to $50,000 each, totaling over $1.53 million to 34 eager homebuyers across our footprint. Another 35 families are in the pipeline to receive grants that will total in an additional $1.71 million from one of our 39 participating members. We are well on our way to dispersing the remainder of our $10 million commitment this year. This is a testament to both the need for this targeted program and how dedicated our member partners are to making a difference in people's lives. Ensuring that people living in lower income communities have the infrastructure and resources they need to fully participate in a changing economy is an ongoing challenge. An even larger number of our credit union partners participate in our AHEAD Economic Development Program. Our members and their community partners use AHEAD grants to help create a brighter, more equitable future for underserved people, neighborhoods, and communities. AHEAD grants give a boost to innovative, targeted initiatives that will create new economic opportunity by expanding proven development models or piloting new interventions. Because of our members' networks and community connections, AHEAD funding can help create or preserve jobs, deliver training or education programs, support small business, micro lending, and micro enterprise incubation, address the special economic development needs of at-risk youth, veterans, persons with disabilities, the formerly incarcerated, and tribal communities, among others. Financial literacy programs are also a priority for many of the credit union members participating in our AHEAD program, which is synergistic with credit union commitments to empowering their members with financial education. Federal Home Loan Bank San Francisco shares with all of you here today a deep commitment to DEI and an understanding that DE&I practices and policies are not just the right and fair thing to do, but rather they have become an undeniable business imperative. All of us who are in the business of lending, which at its core is about relationships, need to look at DEI from the inside out so that we can create and foster a diverse workforce that represents the richness of our communities and successfully reach an increasingly diverse population, meeting them where they are, reflecting back to them relevant lived experience, and innovating on credit products that break down deeply embedded structural barriers to equity. Representation matters. Here are just a few of the reasons why increasing diversity in the lending marketplace matters. It's all about the changing demographics of the United States. By 2050, a majority of the US population will be non-white. Urban Institute projects Latinos will be 70% of new home buyers in 20 years. It is estimated that the financial industry is missing out on $700 billion by not meeting the needs of women. And distressingly, a majority of Black Americans report discrimination in accessing financial services. The Black Homeownership Collaborative, which we support, estimates that there are 3.4 million mortgage-ready Black Americans, which is twice the number of current Black homeowners, and another 2 million who are near ready. Before the passage of the Fair Housing Act in 1968, which addressed redlining and other clearly discriminatory practices, the gap between Black and white homeownership rates was 27 percentage points. The gap had narrowed to 23.8% by 1990, but today it has climbed up even higher than it was in 1968 to 30%. Home ownership is one of the most impactful wealth-building tools we have in American society, and no one should be excluded from the opportunity to achieve and sustain owning a home of their own. In addition to providing a stable environment for raising our families, home ownership often builds intergenerational wealth For example, home equity is one way to help pay for higher education for our children. Too many Black families and other people of color have been unable to generate the kind of wealth that has been passed down for generations in white families, providing resources for the next generation of home buyers. A key part of our broader mission is to partner with our members, community organizations, and other stakeholders to promote sustainable homeownership and affordable housing to make our communities more vibrant, resilient, and equitable. Under my leadership at the Federal Home Loan Bank of San Francisco, we are passionately committed to delivering a major social impact by intentionally directing both financial and other resources towards narrowing the racial homeownership and associated wealth gaps. In 2022, we invested $1.5 million in a collaboration with the Urban Institute to add relevant data to the search for tangible solutions to racial equity in homeownership. Evidence-based research is key to critically evaluating the systemic barriers that continue to limit homeownership opportunities for people of color. Our Racial Equity Accelerator has focused on 4 areas that we think are ripe for innovations that would help advance equity. First, underwriting. Given the data, we know current underwriting practices and tools are not moving us towards our goals. The racial disparities present in lending criteria that drive mortgage underwriting today show us the consequences of historical and systemical racial discrimination in our society and our institutions. Even some of the automated tools that would, on their face, seem to eliminate bias are in fact based on data that inherently includes past biases. When we talk about the Black homeownership gap, we're talking about hardworking families who pay their rent on time and responsibly manage their bills, and yet they may not be able to qualify for a traditional mortgage because they don't have an extensive credit history. Or those who do have a history and qualify may pay substantially more for a mortgage simply because their credit history doesn't match up perfectly with traditional underwriting parameters. And then there are the credit invisibles, people with insufficient credit history or no credit score at all. Roughly 45 million Americans are in this category, but it's 45% of Black consumers compared with 18% of white consumers that fall into this group. Yet when you think about a family that is already spending 50% of their income on rent, if they've been sustainably able to do this, because at the end of the day, all of this is about sustainability and affordability. We have to ask ourselves, what can be done from an underwriting point of view to advance racial equity and equal access to wealth building opportunity? Today, without a credit score, most conventional lenders won't touch you, despite the fact that you may have been making regular payments for rent, utilities, cell phones, and more for years. The kind of regular payments that are clearly indicative of the ability and willingness to pay. To give Black and all families of color a fair and equitable chance of homeownership, our Racial Equity Accelerator focused on how the mortgage finance industry can reevaluate current underwriting criteria and rethink ways of evaluating borrowers' ability to pay back a mortgage. The first deliverable of our collaborative was a white paper that represents a roadmap for understanding the harm of current underwriting models that rely on traditional credit scores and proposes tangible solutions that use other data, most notably consistent timely rent payments, to determine creditworthiness. Our second Racial Equity Accelerator paper examined how student debt affects homeownership among young Black adults and explored ways to mitigate the burden of that debt. We sought to better understand the specific effects of student loan debt on mortgage lending, particularly on Black graduates who are most likely to carry that burden after graduation. The data showed that most mortgage applicants are denied because of low credit scores, lack of adequate collateral, and high ratios of debt to income. Lower credit scores can often be correlated to the burden of student loan debt, and Black borrowers are more likely to have student debt than white borrowers. That's why creating new pathways to homeownership for Black student loan borrowers requires new interventions. They could include simplification of federal student loan repayment programs, improvements in counseling for students before, during, and after college, special purpose credit programs that target specific demographics and circumstances, and other policies and programs that take direct aim at remediating the underlying causes of the multi-generational wealth gap. Our most recently published paper tackles how to make homeownership more sustainable. The housing finance industry has created a robust foreclosure prevention toolkit over the past 15 years, but there's still significant room for improvement, and we need to pursue multiple new avenues to reduce the risk of default. Because if people can't stay in their home they have worked so hard to buy, then we still are not achieving our goals. Recent research shows that the greatest number of homeownership defaults are caused by shocks, such as unexpected expenses, job loss, large debt payments, illness, disability, or death. Black homeowners are more vulnerable to all of these shocks due to their generally lower levels of liquid assets, more precarious employment, larger debt-to-income ratios, greater medical debt, and the higher cost of homeownership. This report examines a variety of new product structures aimed at supporting homeowners who experience temporary financial hardship, with a particular focus on how mortgage reserve accounts could help homeowners avoid default. The report finds that a mortgage reserve account, which is a savings account tied to an individual mortgage and funded by reducing the down payment, is a promising solution that borrowers experience an income or expense shock could use to make their mortgage payments. This solution should disproportionately benefit Black families who are more than twice as likely as white families to lose their home to foreclosure. What we ultimately want to do is to change the rules of the road for mortgage finance. And I'm very proud of our partnership with Urban on this important journey. To that end, our final accelerator paper will focus on the role of artificial intelligence, or AI, in mortgage lending to overcome historical mortgage lending biases. This report will take a deep dive into how we can first acknowledge and then root out inherent biases in AI and algorithms used in mortgage finance. Our charge now is to apply the best thinking available to creating solutions that scale and inspire actionable advancements in policy and practice. Another important way that we have engaged with our members to advance racial equity is by providing targeted financial resources to HUD-approved housing counseling agencies, or HCAs, that serve communities of color. I am sure all of you agree that knowledge is power, and last year we introduced a $1 million matching grant program called Empowering Black Homeownership to help ensure that both home buyers and homeowners of color have equal access to information they need to purchase a home or sustain home ownership. Participating members exceeded our expectations by donating $1.2 million to these agencies for a total amount of $2.2 million donated to 22 HCAs. Lastly, I want to talk about the power of connection and collaboration. Starting in 2022, we held 4 regional homeownership solutions summits across our region. And we focused working with the affordable housing community, our members, nonprofits, folks from the academic sector, on how we can move forward on many of these important issues through a series of frank discussions about how existing systems and structures in the lending industry are failing so many people in our country. We asked for new ideas, and we will be publishing a report summarizing those conversations and documenting top-line takeaways as part of what we hope will be a continuing dialogue on how we all can work together to advance racial equity in homeownership. As I hope you felt listening to my remarks today, while the challenges to achieving equity are real, so are the opportunities for making meaningful change. All of you here represent organizations that are constantly evolving to meet the changing needs of your members, your workforce, and the communities you serve, as I do. We can leverage our diversity to innovate product and service offerings to help our members achieve their goals. We can work together to promote financial inclusion so that everyone is operating on a level playing field. Since credit unions and Federal Home Loan Banks share a common commitment to empowering our members, we are natural partners in these endeavors. Despite the well-known challenges, I believe that with our industry focused on and working toward a common goal, and if we are bold, mindful, brave, and committed to change, ultimately we will be successful in breaking down barriers to racial equity in homeownership and reducing wealth disparities. Thank you for the opportunity to speak with you on this important subject today.